Hello everybody, this is CA Dhanush Sir, solving your May 2025 accounts paper. I'm sure your exams have gone very well. Let us get ahead to see a discussion of the answers. The first question, as usual, was talking about true or false. State with reasons whether the following are true or false. Trade discount is recorded in the discount column in a triple column cash book. The statement is false. Your trade discount is never recorded in the books of accounts. The transaction will always be shown at net value. So trade discount is not recorded in our books. The statement given is false. Money measurement concept means transactions are to be recorded at uniform monetary units. The statement is true. When they say uniform monetary units, they are talking about all currency to be converted into home currency. If there is any transaction happening in a foreign currency, it should be converted to home currency and it should be recorded in uniform monetary rate, basically in rupees. Coming down to the third transaction, if a non-profit organization, if a society, NPO, has a separate trading activity, profit and loss from the trading activity shall be transferred to the income and expenditure account at the time of consolidation. True. Example, there could be an NPO in the form of a school which trades. That means they buy and sell textbooks. Whatever profit is made on textbooks, that will be added to the income and expenditure account. A club could have trading activity in food. Whatever profit on food is there will be added to your income and expenditure account. True. Partners in a partnership firm will share profits of a business according to their capital contribution in the absence of any information in the agreement. In the absence of any agreement, profits will not be in the capital contribution ratio. It will be in equal ratio. Hence, this particular statement is false. LLP should have two designated partners, true, who are resident in India, false. It should have two designated partners, but only one of them should be resident in India. A non-profit organization registered under Section 8 of the Companies Act can distribute profits, can distribute surplus among its members, false. A Section 8 company works for benefit of the society, not for profit for the owner. They are restricted from transferring profits to the owner. Therefore, the statement becomes false. 1B, explain the following. What are the objectives of accounting standards? Quite simple. Providing a set of uniform rules, improving the reliability, improving the transparency becomes the objectives of having accounting standards. If we have accounting standards will help to have uniform rules for guidance, uniform guidance for accounting. Reliability of accounting improves, transparency of accounts improves, it eliminates non-comparability. All these could be taken as your objectives. Accounts become more comparable. What is the difference between liability and contingent liability? A liability is a present obligation, whereas a contingent liability is a possible obligation. Liabilities are recorded in accounts. Contingent liabilities are not recorded in accounts. Liability will lead to economic outflow. Contingent liability, economic outflow is not probable. These were few differences between liabilities and contingent liability. A trader prepared his final accounts on 31st March every year. Due to unavoidable reasons, no inventory taking could be possible till 15th April. What is the date of physical verification? 15th April, on which date the goods costed or the cost of goods in the store came to 1,50,000. What is the note? The valuation is happening or the verification is happening after your balance sheet date. The following facts were established between 31st March to 15th April. Sales, cash 70,000, cash 25,000, credit 70,000. How much will you make an adjustment for? Full 95,000 is your sales. What is your cost of sales? 95,000. Profit data Profit data given in the end. What is the question saying? Goods are sold by the trader at a profit of 20% on sale. 20% directly given on selling price. Can I apply? Yes, sir. 95,000 minus 20%. What do you get? 76,000. Will you add or deduct? Add. Cash purchase is 15, credit purchase is 25. What will you make an adjustment for? 40,000 purchases will be added or deducted? 40,000 purchase will be deducted. On 25th March, goods of the sale value 30,000 were sent on sale or return basis to a customer. The period of approval being 4 weeks. He returned 25% of the goods on 12th April. When is the verification date? 15th April. 25% of the goods are returned. How much is there with the customer? 75%. Can you tell me the selling price of those goods? Selling price is equal to 30,000 into 75%. Kitna? 22,500. What is the cost price of these goods? 22,500 minus 20%. That is equal to kitna? 18,000. Will be added or deducted? Why do you say added? The goods belong to the business lying in the godown of the customer. Therefore, it will be added. The trader had also received goods costing rupees 10,000 in March for sale on consignment basis. In this question, the trader is consignee. Unsold goods on consignment belongs to consigner, is in the possession of consignee. 50% of the goods had been sold by 31st March, 25% was sold by 15th April. How much is your unsold stock? Unsold stock is 25%. 10,000 into 25% comes to 2,500. Belongs to business and it is in the possession of. In this question, we are consignee. So it is in my possession, but it does not belong to me. What should I do? Add or deduct? Deduct. Make an adjustment and tell me what will be the value of stock as on 31st March. What is your value of stock? 2,01,500. This is your exam question 1C. Coming down to question number 2. Following errors were found in the books of XYZ. Give necessary entries to rectify them, to correct them. Rectification of errors. A purchase of goods from R amounting to 10,000 has been wrongly entered through the sales book. Let us look at what is the correct entry for transaction number 1. Your correct entry, it is a transaction of purchase. It should have been purchase account debit to R. But what have they wrongly recorded? They have passed it through the sales book. So they would have recorded R2 sales. Based on this, what is our rectification? Our rectification, purchase account under debit should be debited. Sales account over credit should be debited. R will be credited. Double rectification for R. Coming down to transaction number 2. Furniture purchased for the office use amounting to 25,000 has been entered in the purchase day book. Furniture purchased. What is your correct entry? Correct entry should have been furniture to cash has been passed through the purchase day book. So the wrong entry will be purchase account debit to cash. What is our rectification based on this? Furniture account under debit will be debited to purchase account. Purchase account over debit shall be credited. Coming down to transaction number 3. Minor repairs to furniture account amounting to 1500 were debited to furniture account. Minor repairs, correct entry will be repairs account debited to cash. What is the wrong entry? They have passed it through your furniture account. They have recorded furniture to cash. Based on this, what is the rectification? Rectification, repairs to furniture. Transaction number 4. Wages amounting to 3,000 paid to the workmen for making office furniture has been debited to wages account. You paid the workmen for office furniture. Furniture account should be debited. The correct entry is furniture to cash, but then they have debited it to wages account. They have recorded wages to cash. What will be your entry for rectification? We will record furniture account debit to wages. Point 234 of similar nature. I hope all of you got it right. Let's come down to transaction 5. Tuition fees of the proprietor's son has been debited to audit fees account. Once again, of similar nature, the correct transaction, tuition fees is a personal expense, should be taken as drawings account debit to cash. But by mistake, they have taken it to audit fees account. They have taken audit fees to cash. Based on this, what would be the rectification entry? Drawings account debit to audit fees. 2, 3, 4, 5, all very similar in nature for accounting. Let's see point number 6. An amount of 10,000 due from Mohan, which had been written off as a bad debt in the previous year, was unexpectedly recovered and has been posted to the personal account of Mohan. Bad debt recovered. What would be the correct entry? The correct entry would be cash account debit to bad debt recovered account. But what have they done? They have wrongly posted it to the personal account of Mohan. So they have recorded cash to Mohan. Based on this, what would be the rectification entry? Mohan account has been over credited. Mohan account debit to bad debt recovered. Point number 7. Goods cost being 7,000, selling price 10,000, distributed as free samples among prospective customers were not recorded anywhere. If a transaction is completely omitted, if it's an error of complete omission, correct entry will become rectification entry. Why? Because there is no any wrong entry. Based on this, what would be your rectification entry? Correct entry for free samples distributed. Advertisement account debit to purchases account. Come down to transaction number 8. Come down to transaction number 8. Transaction 8 is saying goods amounting to 1,000 returned by a customer G and Company were entered in the sales day book and posted therefrom to the credit of his account. The transaction is talking about a sales return. What would be the correct entry for sales return? Sales return account debit to G and Company account. But what have they wrongly done? They have posted it to the sales book. They have posted it, they were entered in the sales book. So what will be the wrong entry? Can I say to sales? Sales has been credited and from there posted to the credit of his account. They are also saying that G and Company account has also been credited. Sales account also credit, G and Company also credit. Journal entry will not match. Automatically, what do you get on the debit side? Suspense. For this, what will be the rectification entry? Your rectification entry will be sales account debit, sales return account debit to suspense account. Analysis, just let me give you for this. Sales return account is under debited, suspense account is over debited, sales account is over credited. Come down to point number 9. Point number 9, we have a bill of exchange received from SS and Company for 10,000 had been returned by the bank as dishonored and had been credited to the bank account debited to bill receivable account. The bill has been sent to the banker, it has been dishonored. What would be your correct entry? Your correct entry will be SS and Company to bank. And the wrong entry that they have recorded, they have credited bank, debited BR to bank. So what would be the rectification entry? SS and Company to bill receivable. Come down to the last one, point number 10. A bill receivable for 2,500 has been passed through bill payable book. The bill was given by Jack. If the bill is given by Jack, what is the correct entry? Bill receivable to Jack. It has been passed through bill payable book. What will be the wrong entry? Jack to bill payable. Based on this, what is the rectification? Bill receivable debit, bill payable debit to Jack. Jack double rectification because it is of opposite nature. I hope this clarifies your entries for rectification. Most of it were quite simple itself. Bank reconciliation statement question of the recent exam. Prepare the bank reconciliation statement of XYZ brothers on 31st March from the given particulars. The question is saying bank passbook had a debit balance of 62,500 on 31st March. Where will you take this? In your bank reconciliation statement, you will start with balance as per passbook. How much is the balance as per passbook? Negative 62,500. Let us go ahead. Transaction number 2, please read. A check worth 1,000 directly deposited into the bank by a customer, but no entry made in the cash book. Add or deduct? How many of you say add? How many of you say deduct? Everyone together. Where is the transaction recorded? Passbook. Passbook balance goes up. What is the starting point? Passbook. How to go to cash book? Deduct. Deduct 1,000. Come down to transaction number 3. Out of check issued worth 85,000, checks amounting to 50,000 only were presented for payment. Check issued not presented. Kitna? 85,000 minus 50,000. Kitna? 35,000. Will you add or deduct? Why do you say deduct? Check issued not presented. Where is it recorded? Cash book balance goes down. Starting point passbook. To go to cash book, you will deduct. Deduct 35,000. Come down to transaction number 4. A check of 10,000 received and entered in the cash book but not sent to the bank. Add or deduct? Check received, not deposited. Where is the transaction recorded? Cash book. Cash book balance goes up. What is the starting point? From passbook, how to go to cash book? Add. Add 10,000. Pause. How many of you got all the 4 correct till now? I told you in the exam I want you to score 10 out of 10. As of now, you have scored out of out. Let's go ahead. Fifth one, interesting, slightly new, but not confusing. Let's see how many of you get it right. It's new, but it's not confusing. Checks worth 50,000 had been sent to the bank for collection. Checks worth rupees 50,000 had been sent to the bank for collection. But the collection report by the bank reported as under. What is the total values deposited? 50,000. Checks collected before 31st March, 35,000. Checks collected on 10th April, 10,000. 12th April, 5,000. Can I say this 15 is deposited, not cleared? You have deposited the check, you have sent the check for collection. As on 31st March, it is not cleared. How much is not cleared? 15,000. Check deposited, not cleared. Will you add or will you deduct? How much will you add? 15,000. Everybody together. Why add? Check deposited, cash book goes up. Passbook is the starting point. Add. Everybody good to go? Yes, sir. Like I said, check deposited, not cleared. Concept remains the same. The language of questioning has changed. Point number 6, the bank made a direct payment of 1,500 not recorded in the cash book. 1,500, add or deduct. Why do you say add? Direct payment by the bank. Passbook goes down. Passbook starting point, add. Interest on overdraft charged by the bank 4,000 not recorded in the cash book. Add or deduct. Why do you say add? Interest on overdraft recorded in passbook. Passbook up or down? Interest taken by the bank. Passbook goes down. Passbook is the starting point. Add. Come down to the last two transactions. 8A, bank charges worth 200 have been entered twice in the cash book. Bank charges 200 entered twice in the cash book. Add or deduct? Add or deduct? Take 10 seconds. Take 10 seconds. Don't confuse yourself. Take 10 seconds. Do your Bharatnatyam. Tell me add or deduct. How many of you say add? How many of you say deduct? Everybody together. Where is the transaction recorded? Both the books. In your passbook, receipt or payment. One time payment. In your cash book, two time payment. Cash book is lower. Passbook is the starting point. Deduct kitna? Deduct 200. Whereas insurance charges of 175 directly paid by the bank have not been entered in the cash book at all. 175. Why do you say add? Direct payment by the bank. Passbook goes down. Passbook starting point, add. Last transaction, credit side of the bank column of the cash book was undercast. Credit side of cash book means what? Payment or receipt? Payment side is recorded lower. What will be the analysis? In the passbook, you recorded correct payment. In the cash book, you recorded less payment. Cash book will be higher. Passbook is the starting point. Add. Add how much? Add 5,000. How many of you got all these transactions right? You got 10 out of 10 in your BRS. Next question, we have 3A. Receipts and payments account of ABC Club for the year ended 31st March is given to you. If I just come down to the additional information, you have opening balances and closing balances. Opening balances pertain to the previous year, closing balances pertain to the current year. And then they would have given, they are saying for the year ended 31st March 2025, honorarium to the secretary and treasurer to be increased by 3 lakh. Prepare income and expenditure account and balance sheet. So the receipts and payments account will be a base to prepare this income and expenditure account and balance sheet. Let us go ahead to work upon it. In the starting, in the receipts and payments account, they've given you cash in hand balance at bank as per passbook. They have not given you cash book balances. They've given you passbook balances. You need to reconcile and then you need to find out your cash book balance. Okay. Let us see what are the items that we have over here. First, we are looking at the receipts. We will record the incomes in the income and expenditure account. Bank interest 45. If I come down to the additional information, we have somewhere it says interest not yet entered in the passbook 30. 45 received, 30 outstanding. What will be your bank interest? It is going to be 75. Bank interest is 75, which is nothing but 45 received plus 30 outstanding at the end of the year. Come down to the next item. We have donations and subscriptions 3,900. So I'll start by saying subscription 3,900. Out of that, is there any outstanding or prepaid subscription due beginning of the year? 225 pertains to last year. 225 will be deducted plus 150 at the end of the year pertains to current year to be added. You get your subscription donation 3,825. Coming down to the next item again, after your donation subscription, you have receipt from T. Now, if I look at this question, we have receipt from T 450 and we have cost of T 375. Can we record the net profit from T? Yes. The receipts are greater than the payment, so it will be a profit. So I will say profit from T sale. Your receipts are 450 and your payments are 375. Net amount of profit will be 75. Then the next one we have contribution to fair. We have received 150 and fares we have paid 600. Can I again record the net amount? Yes. In this case, your payments is higher, then it will be an expense. So I'm going to say on the debit side, fares. Payment of 600, receiving 150, net amount of expense is 450. Continuing ahead, we have next item, sale of equipment. Sale of equipment is a capital item. I will take it to a working note. I'll prepare fixed asset account. Net proceeds of variety entertainment. Can I record directly 1170? Yes, there is no any adjustment for this variety entertainment item. So directly coming down to your income side, entertainment income. 1170 as it is given in the question. Going back to the question, we have donation for forthcoming tournament. It is a specific donation. It will be taken in your balance sheet. Coming down to the items on the expenses side. Groundman fee is 1125. If I see there is nothing adjusted towards groundman fee, groundman bonus is there, which I will take separately in the end. So directly I record expense side. Groundman fees directly given amount kitna? Groundman fees given amount is 1125. Next, let us continue the items on the payment side. We have moving machine. Again, moving machine, a capital item. I will take it to your balance sheet. Ground rent 375. I'll record ground rent 375. Is there any adjustment for ground rent? If I go back to the additional items, we have printing, we have repairs, we have machinery equipment. There is nothing for rent. So directly I can record ground rent kitna? 375. Coming down to the next item, we have taken cost of tea, we have taken fares. Printing and office expenses 420. Printing and office expenses. Amount paid is equal to 420. Let us see if there is any outstanding prepaid item. We have amount due for printing. So 150 due pertains to last year, 120 pertains to current year. So I will have minus 150 of the last year plus 120 of the current year. Your amount of expense for printing and stationery comes down to, printing and office comes down to 390 if I am not wrong. Just let me calculate. 420 minus 150 plus 120. That is 390. Yes. Continuing ahead, what do we have next? We have repairs to equipment 750. So I'll write down over here repairs. Repairs to equipment kitna? 750. Yes. From this 750, do we have to make any adjustment? Let us look at it. I come down to see checks unpresented being payment for repairs. Now, actually, checks unpresented means you have issued the check, but they have not presented it for payment. So, from your side, you have issued the check, but there is no any outstanding payment. It will not come as an outstanding item in your balance sheet. But these receipts and payments, whatever is given to you, is given from bank point of view. You need to find out from cash book point of view. In the bank, this was not recorded because it was unpresented. But would it be there in the cash book? Yes. So you would make an adjustment towards this 450 and 390 as well. I will make an adjustment by saying minus opening balance 450, add closing balance 390. I'm repeating, we are just trying to convert this to your cash receipts, cash payments. They have given you from bank point of view. You get your repairs equal to 690. There is no outstanding item to be taken in the balance sheet. You have already issued the check. It is not presented. It is a BRS item. When we prepare BRS, we'll look at it. Then I come back to see further after repairs to equipment, we have honorarium to the secretary paid for 2024 600. And I remember reading somewhere that they said honorarium for the current year to be increased by 3 lakh. Beta, do not do 600 plus 3 lakh. No, whatever numbers are given to you in the above table, if you read in the first line, it is saying figures in thousands. So that is nothing but 6 lakh. 6 lakh of the previous year, 3 lakh of the current year. Total honorarium will come. I'll repeat. Honorarium 6 lakh of the previous year, 600 plus 3 lakh to be introduced or to be increased in the current year, 300. Your total honorarium is 900. Please understand whatever we have paid belongs to last year will come in opening balance sheet, and whatever is current year amount is unpaid, that will come in closing balance sheet as well. Continuing the next item, balance as per your passbook. Again, it has come down to your cash book, passbook items. That is nothing but your closing balances. Okay. So these are the items in your income and expenditure account. Now let us look at the items that I have not considered. There was your capital items that I did not consider, which is nothing but your moving machine, sale of equipment. So let me prepare as a working note fixed asset account. I go ahead to prepare fixed asset account as a working note. I'll start by recording to balance brought down, opening value of fixed asset given in the table, estimated value of machinery equipment 1200. Closing balance also given in the same table by balance carried down. It is 2625. Along with this, we have purchase of one item. Which item have we purchased? Moving machine. What is the value of moving machine? 2250. We also have sale of equipment. What is the value of equipment sold? 120. Both of these items which I am marking in orange color, I got it from my receipts and payments account. Now if I try to close this fixed asset account, I get a total of 3450 debit. It is not matching to credit side, so credit side you get a balancing figure. What is the balancing figure? 3450 minus 2625 minus 120. 705 is your balancing figure. Coming down on the asset credit side, representing asset going down. This is depreciation. Value of the asset is going down. It is not your sale, so it represents your depreciation. Does depreciation come in income and expenditure account? Yes, it will come down on the credit side. I record depreciation as per your working note 705. I think these are all your incomes and expenses. Once you record all these items, you get a surplus. The amount of surplus is 60 rupees, giving a total of 5145. So that is your income and expenditure account. All the calculations were quite simple, nothing to be worried about. Let us come down to prepare the balance sheet. I'll start preparing the opening balance sheet, taking directly from the table the first pieces of information. So I just keep the table along with me. April 1st data I will record, subscription due asset, outstanding subscription, opening balance 225. Then you had your machinery and equipment, again opening balance 1200. Then what do we have? Amount due for printing is outstanding printing, opening balance 150. Checks unpresented being payment for repairs. I told you you have already presented the check. There is no any outstanding item. and there is nothing else in this table. But is there anything else still? Yes, go back to your receipts and payments account. Honorarium of treasurer for the last year is paid. So we have opening outstanding honorarium. The amount paid in current year is 6 lakh 600 I'm taking over here. And then on your receipts and payments account, you have your opening balances. We have cash account as it is 150. You have deposit account as it is 3,345. And you have the current account. Current account, can I record as it is balance? No. The given balance of current account is 900. From this, what am I going to adjust? The checks unpresented being a BRS item. Here I am going to deduct it 450 and your current account balance is 450. I think these are all the items that I record in my opening balance sheet, total being 5370. What do you get capital as a balancing figure? Capital balancing figure will be 4,620. 4,620. Let me just check. Yes, total matching. Okay, so this is your opening balance sheet and you got capital as a balancing figure. Now I will use this capital to find out the balance sheet at the end of the year. I start by saying capital. How much money we got? 4,620. To this 4,620, we add the surplus that we had got in the income and expenditure account, 20 rupees. Closing capital is, no, we had got surplus more than 20. We had got about 60 rupees. So your closing capital will be 4,680. What else do I have? Again, come back to that table. Look at the closing balances. You have closing balances, subscription due, asset side, outstanding subscription 150. Next item you have amount due for printing, liability side, outstanding printing, closing balance 120. Then we have checks unpresented being payment for repairs, not an outstanding item, value of machinery equipment, asset kitna, closing balance is 2625. Then we have your interest not entered in the passbook, outstanding interest receivable asset, outstanding interest receivable asset 30 rupees. And then we have bonus to groundsman outstanding. I think I did not record bonus to groundsman over here. In your income and expenditure account, I have not written it. Yeah, you have bonus also. After the bonus, the surplus is 60 rupees. How much is bonus to groundsman outstanding? Bonus to groundsman outstanding is 450. Okay. Come back to your balance sheet. In your balance sheet now over here, we also have outstanding bonus. Outstanding bonus on the liability side, 450. Interest taken on the asset side. What else do we have, sir? Now, if I go back to my receipts and payments account, it will remind me of outstanding honorarium. Outstanding honorarium for current year kitna? 900. Then we have your cash balance as it is. How much is it? Cash balance in the end of the year is 375. Then you have your deposit account. Deposit account is kitna? 4,635. And then you have your current account. Current account again given as per passbook to be converted to cash book. They have given you 225. And how much is the adjustment to be made? Your unpresented checks at the end of the year is 390. 225 minus 390. How much will remain? You get a negative balance. How much is your negative balance? 165. So this current account you don't present on the asset side, you present it on the liability side, which is nothing but a 390 minus 225, negative balance of 165. Apart from this, what else do we have? Is the balance sheet matching? No, we have one more item in the receipts and payments account, which I had not taken earlier. Donation for the forthcoming tournament will come on your liability side. On the liability side, I write tournament donation 1,500. Now let me just check if the balance sheet is matching. 4680, 4680 plus 1500 plus 120, 450, 900, 165. 7815 is the total of the balance sheet liability side. Asset side also, is it matching? 150, 2625, 30, 375 and 4635. Yes, that is also matching to 7815. This was your balance sheet at the end of the year. I think quite a simple question. Same question, similar question of numbers were there in your Yashas material also, part of ICI material also. Only point to be taken care of, the BRS item for your unpresented check for repairs. The things were good to go. Question number 3B. A, B, C are partners sharing profits and losses in the ratio 2 is to 2 is to 1. 2 to 1 is your old ratio. Their balance sheet as on 31st March is given to you. On the asset side, we have land and building, furniture, closing stock, debtors, cash and bank. On the liability side, creditors, outstanding liabilities, reserves, and capital of A, B, C. The partners have agreed to take D as a partner with effect from 1st April on the following terms. D shall bring 7,500 towards his capital and the required sum of goodwill. Goodwill will also be brought into the firm. Value of stock to be increased by 3,750. Revaluation. I'll go ahead to prepare the accounts. Okay. Revaluation we have. Provision for bad and doubtful debts should be provided at 10%. Again, revaluation. Furniture should be depreciated by 10%. Again, revaluation. Value of land and building to be enhanced by 20%. Again, revaluation. The value of goodwill is fixed as 22,500. Goodwill of the firm given to you. We will make an adjustment in the partner's capital account. General reserve to be transferred to partner's capital account in your old profit sharing ratio. New profit sharing ratio ABCD 5532. Outstanding liabilities include 1,500 due to R being paid by partner A, nothing but liability being paid by a partner taken to partner's capital account. Necessary entry was not made, we will record it. You are required to prepare revaluation account, partner's capital account and balance sheet. Let's go ahead to prepare this. I think we'll need one working note for this. Working note calculation of gain or sacrifice ratio. There are four partners A, B, C, D. Old ratio, if I recall, this 2 is to 2 is to 1, 2 by 5, 2 by 5, 1 by 5, and the new ratio 5, 5, 3, 2. 5 by 15, 5 by 15, 3 by 15, and 2 by 15. If you calculate, there is a gain for partner D, 2 by 15, and there is a sacrifice for partner A and B, 1 by 15 each. Partner C, there is no sacrifice, no gain. Why did we calculate this? To get your gain or sacrifice ratio. Why do we need gain or sacrifice ratio? For goodwill adjustment. We will go ahead to prepare revaluation account. If I go back to the question, the first few points, point 2 to 5, we're talking about revaluation. Value of stock to be increased. Value of stock to be increased in your revaluation account. Which side? Credit side, I will record buy stock 3,750. Provision for bad debts to be provided at 10% of the debtors. Debtor balance 8,250. So I will prepare two provision for bad debt 825. Furniture to be depreciated by 10%. Given value of furniture 9,750. Debit side to furniture 10%, that is equal to 975. Value of land and building to be enhanced by 20%. 37,500 into 20%. Credit side by land and building 7,500. These are the items in your revaluation account. Once you take a balancing figure, you will transfer to partner's capital account in the old profit sharing ratio. So if you see, we have share of A is 3780, B is also 3780, and C is 1890. And that is how your revaluation account closes. Let us go ahead to prepare the partner's capital account. Partner's capital account I will go ahead to prepare. We start usually by recording the items on the opening balances on the credit side. Credit side, I will start by saying by balance brought down. Opening balance for Mr. A given in the balance sheet is 18,000. B also given 18,000. C is given 7,500. D is the new incoming partner. If I go back to the question, we have point number A, D shall bring 7,500 towards his capital and a required sum of goodwill. Goodwill of the firm is 22,500. What will be his share of goodwill? 22,500 into D's share. What is D's share? 2 by 15. 22,500 into 2 by 15. That is equal to 3,000, I believe. I will just make a calculation. Yes, that is equal to 3,000. So the total amount brought in by D will be 7,500 plus 3,000, recording on the capital account credit side by cash 10,500. Revaluation account, we got a profit. I bring it down on the credit side by revaluation account. We had 3780, 3780 and 1890 for the respective partners. I remember reading in the balance sheet we had reserves. What was my reserve balance? 9,750 will be distributed again in your old ratio. 3,900 to A, 3,900 to B, 1,950 to C, and 0 to D. Apart from this, we also have a goodwill adjustment entry. Goodwill adjustment entry in the gain or sacrifice ratio. We saw that D was the gaining partner. So by D's capital, and who are the sacrificing partners? A and B. 2A and B capital. Goodwill of the firm 22,500 into D's share 3,000. 3,000 will go between A and B in their sacrifice ratio 1,500, 1,500. I'll just look at the question if all the items are taken. Capital adjustment done. Revaluation all done. Goodwill adjustment done, reserves distributed, NPSR considered, outstanding liability to be paid by A. So I will pay the liability on the credit side. I can record by outstanding liabilities. Outstanding liability paid by A amounting to 1,500. Once you record these items, you can take your balance carried down. Balance carried down for each of the partners. A will be 28,680 as per my calculation. B is 27,180. C is 11,340 and D is 7,500. He bought 10,500, 3,000 adjusted towards goodwill, 7,500 remained in his capital account. This is your capital account of the partners. Post this, we should go ahead to prepare balance sheet. So I go ahead to prepare the balance sheet of the firm, use the given balance sheet as a base. So I go back to the given balance sheet, but I will record the revalued numbers. The first item we have land and building. After increasing 20%, it comes to 45,000. Next one we have furniture. After reduction of 10%, it comes to 8,775. Next we have stock. Again revalued amount to 21,375. You have debtor balance. Again revalued amount to 7,425. Was there a revaluation of stock? Six. Yes, I think stock increased by 3,750. Yes, we increased the stock value. Debtors again after provision we have recorded 7,425 and cash balance given cash plus the amount brought in by D 12,150 will be your closing cash balance. On the liabilities side, we have capital of A, B, C, D, same, whatever closing balances we got in our partner's capital account. And along with that, you have given balance of creditors and outstanding liabilities. Will I take general reserve? No, because it is distributed. In the outstanding liabilities also, part has been paid by A. So I will take creditors as it is 19,275 and outstanding liabilities after the payment by Mr. A, remaining amount is 750. If you check, your balance sheet matches with a total of 94,725. This is your question number 3B. Let's come to 4A, another question of partnership. Amal, Bimal, Kamal were in partnership, sharing profits in proportion of 3 is to 2 is to 1. 3 to 1 is the ratio given to you. The balance sheet of the firm as on 31st March was as under. In the balance sheet, we have building, fixture, equipment, inventory, trade receivables, cash in bank, liabilities side, capital of the partners, and trade payables. Amal had been suffering from ill health and gave notice that he wished to retire from the firm. An agreement was therefore entered into on 31st March 2024, the terms of which were as follows. The profit for the year ended 2024, which showed a net profit, and the profit and loss account, which showed a net profit of 1,50,000, was to be reopened. Bimal was to be credited. Bimal was to be credited with 3,000 or 30,000 as bonus in consideration of the extra work which had devolved upon him during the year. The profit sharing ratio was to be revised to enable the partners to share profits and losses equally. Whatever given ratio, we are not going to consider it. Now, the revised old ratio is equal between the partners. Along with that, they are saying goodwill is to be valued at 3 years purchase of the average profit of preceding 4 years. The following were the amounts of profits. Let us quickly make a average profit calculation. Total of the profits 1,15,000 plus 1,25,000 plus 1,40,000 plus 1,50,000 divided by 4 gives you valuation of goodwill or valuation of average profit 132,500. Your goodwill value will be 132,500 into 3 years purchase, that is equal to 397,500. However, some of the students might have made an assumption 1,15,000, 125, 140, 150. There is an increasing trend. So you might have calculated weighted average. In case you calculate the weighted average, you get weighted average 138,500. Accordingly, then the goodwill value would change 4,15,500. Best would be to follow the question in the exam. The question has given simple average, just average, so I would have done average, or I would have given a note in case of increasing trend. That is why I have followed weighted average, taken a weight of 1 2 3 4 and found out the weighted average. Weighted average 1,38,500. Accordingly, into 3 number of years of purchase, goodwill you get 4,15,500. If I go back to the question, then it says fixtures were revalued at 1 lakh, building was appreciated by 10%, inventory is written down by 25,000, provision 2.5% on doubtful debts, remaining assets taken at book values. Third paragraph is talking about revaluation account. Bimal Kamal agreed between themselves to continue sharing profits in the ratio 3 is to 2. 3 is to 2 is your new ratio. Amount due to Amal is to be transferred to his loan account and to be settled later. You are required to prepare revaluation account and partners capital account. They've not asked you the balance sheet. So I think I've already done the valuation of goodwill. Let us go ahead to reopen the profit and loss account. So as a part of the solution, I will prepare adjusted P&L account. So I will go ahead to prepare adjusted profit and loss account because I want to reopen the profits. The profit given in the question shall be taken as a base. We are going to start with by net profit. If I come back to look at point number 1, my net profit existing is 1,50,000, and this 1,50,000 had been distributed between all of them in 3-2-1. So you will not have it as by net profit, but we will have it from each of the partners. Reversal from Amal, reversal from Bimal and Kamal. Reversal is going to be 1,50,000 into 3 by 5, or rather the ratio is 3 by 6. That will be 75,000, 1,50,000 into 2 by 6, and 1,50,000 into 1 by 6. Reversal of profit 75,000 for Amal, 50,000 for Bimal, and 25,000 for Kamal. This is the reversal of the profit in the 3-to-1 ratio. After this, they are asking us to give bonus to one of the partner, Bimal, directly given to you 30,000. Remaining profit will be shared again between the partners, to Amal, to Bimal, to Kamal. We were having a profit of 150. From that, I distributed a bonus of 30,000. The remaining profit of 1,20,000 I will distribute equally between the partners, because they said that the revised share would be equal. 1,20,000 into 1 by 3, that would be 40,000 to each partner. So this can be a part of your working note. The adjusted P&L account, it closes with a total of 1,50,000. Along with this, you would have prepared another working note, valuation of goodwill, which I did in the question itself. Your valuation of goodwill done over here. Now we will go ahead to prepare revaluation account and partners capital accounts. So revaluation account first on the board. The question is saying fixtures were to be revalued at 1 lakh. The given value of fixtures is 1,25,000. Fixture value going down. I will record on the credit side. To fixtures 25,000. Then in the question we have building was to be appreciated by 10% on the credit side. By building, given value of building is 3 lakh, so 30,000 will be your appreciation. Inventories were to be written down by 25,000. Directly inventory going down, debit side. To inventory 25,000 given value. A provision of 2.5% to be made on doubtful debts. Again, debit side. To provision for debts, it is at 2.5%. So 1,90,000 into 2.5%, 4,750. All the remaining assets at book values. Now, if you check, you get the total 54,750. That should be distributed. The balancing figure to be distributed between the partners by Amal, Bimal, Kamal. The balancing figure is how much? 24,750 in 1 by 3 ratio for each. 8,250 will be revaluation loss to each partner. Revaluation account done. We can go ahead to prepare after this partners capital account. So I go ahead to prepare partners capital account considering average profit, not weighted average profit. I am solving as per average profit. So similar format you can have. I think there are 3 partners, Amal, Bimal, Kamal. Just drawing a rough line over there. I'm sure you will be able to get it right. Amal, Bimal, Kamal. We start with the opening balances as it is given in the question by balance brought down. These are your partners' capital accounts. We start with the opening balance, like I said, given in the question, which is equal to 4 lakh, 330 and 180 respectively. In the balance sheet, there was no any reserves. We did adjustments. First point, reversal of the profit to adjusted P&L appropriation account. I reversed in the ratio 3 is to 2 is to 1, 75, 50, 25 respectively. After reversal of profit, we gave bonus to one of the partners, Bimal, 30,000 bonus to Bimal. After which I adjusted the profits in equal ratio. We got 40,000 profit for each. And then we had revaluation loss to revaluation account 8,250, 8,250, 8,250. We need to check your goodwill adjustment. For that, you will need your gain or sacrifice ratio. Let me quickly calculate gain or sacrifice ratio. We will see for each partner what was the old share, what was the new share, basically what is the gain or what is the sacrifice. The partners are Amal, Bimal and Kamal. What is the old share? Old share 1 by 3, 1 by 3, 1 by 3. Yeah, the old share is 1 by 3, 1 by 3, 1 by 3. That's the revised old share. And then your new share between the partners, Amal retired. Who retired? Amal retired and new share given below 3 is to 2. So 3 by 5 and 2 by 5. So the sacrifice of Amal is 1 by 3. Gain of Bimal is 4 by 15. And for Kamal, it is 1 by 15. Let me just check. 5 by 15 matching 1 by 3. So gain of Bimal and Kamal is in the ratio of 4 is to 1. Now we had got the goodwill of the firm. What was the goodwill of the firm based on average profit? The goodwill of the firm is 397,500. 397,500 will be adjusted between these ratios. So I go ahead. Who is the gaining partner? Bimal and Kamal. I will go ahead to write down by Bimal and Kamal to Amal's capital. If I calculate the amounts based on the gain or sacrifice ratio, 1,06,000 for Bimal and 26,500 for Kamal, which is nothing but Amal share, which is 132,500 divided. How did we get 132,500? 397,500 into 1 by 3. 132,500 went in the ratio of 4 is to 1. Had I done your weighted average, then you would have got a different answer. Then here I would have got by Bimal and Kamal 138,500. Why 138,500? Your weighted average 4,15,500 into 1 by 3, 138,500. That 138,500, when I distribute between Amal and Kamal, we get how much for each partner? 1,10,800 and 27,700. So it will be either the orange color in average profit or the green color under weighted average profit. And accordingly, you will calculate your balance carried down. They have not asked us to prepare balance sheet for this. Quite a simple question. Few students might have done average method or few would have done weighted average method. You can look at the question on the board. Yes, beta. Look at the question, everyone. This is question 4B of May 25 exam. Question 4B. The balance sheet of ABC as on 1st April 24 is as follows. On the asset side, we have furniture, vehicle, trade receivables, cash, inventory. On the liability side, creditors, expenses payable, outstanding expense, and capital. During 2024-25, his P&L account revealed a net profit of 8,37,500. This was after allowing for the following. They've given you opening balance sheet 1st April. They've also given you net profit. Net profit was taken after considering commission paid, discount received, purchase of a vehicle, depreciation on furniture fixture 10%, vehicle 20%, provision for doubtful debt 3%. But while preparing P&L account, he had forgotten to provide for prepaid expenses, outstanding commission. His current assets and liabilities as on 31st March. Again, for closing 31st March, they've given you current asset, current liability, inventory, trade receivables before provision, cash at bank, trade payables. During the year, he further introduced further capital 375. You are required to prepare balance sheet at the end of the year. As a solution, I will first prefer to calculate the adjusted profit. I've just copy pasted the question over here to solve. So I'll start by saying adjusted P&L account. Adjusted P&L account. I will start with given net profit. Credit side by net profit kitna? 8,37,500. Then we have outstanding. What items have been considered? Prepaid expenses 18,750, outstanding commission 43,750. 43,750 commission belongs to current year. To commission 43,750. Prepaid expense does not belong to current year. Reverse the expense by prepaid expense 18,750. Calculate adjusted profit. To net profit. Adjusted amount kitna? 8,12,500 is your adjusted profit. Below this, I go ahead to prepare balance sheet. What will I use as a base to prepare the balance sheet? The opening given balance sheet. Go in the order of the question. What's the first item? Furniture. For furniture, the given balance is how much? Given balance is 8,12,500. What is the adjustment done for furniture? Depreciation 10%. So tell me the closing balance. 8,12,500 minus 10%. Kitna beta? 731,250. Next item, vehicle. For vehicle, what is the given balance? 343,750. 343,750 minus depreciation kitna? 20% plus purchase of a vehicle 62,500 on 31st March. Old vehicle 12 months depreciation. New vehicle how many months? 0 months depreciation. So 343,750 minus 20% plus 62,500. That will give you vehicle 3,37,500. Come down to the next item. Trade receivables. Trade receivable go by the closing balance. Closing balance given in the paragraph below. Current assets of trade receivables 1625 before provision. So 16,25,000 minus how much provision is considered? The fifth point is giving us a provision for doubtful debts 3%. So 16,25,000 minus 3%. Kitna beta? 15,76,250. Come down to the next item. What do we have? Cash at bank, inventory. Record as it is given to me. Cash at bank and inventory. I will record below this. Cash 6,87,500. Inventory 8,12,500. Come down to the liability side. We start with capital. Existing capital, opening capital kitna? 27,50,000. So I start with 27,50,000. In this question, we don't have drawings. We have additional capital. I remember reading somewhere last line. During the year, he introduced further capital of 375 plus 3,75,000 additional capital plus net profit. Given net profit or adjusted? Adjusted net profit kitna? 8,12,500. Is there any interest on capital? No, sir. Calculate closing capital. 39,37,500. Go back and see what else do we have. Creditors, expenses payable. How much is creditors? Last paragraph will give you creditors, trade payables 182,500. Outstanding expenses, outstanding commission kitna? 43,750. And prepaid expenses, asset. Prepaid expense kitna? 18,750. These are the items in your balance sheet. Check and tell me what is the total, beta. Your balance sheet totals with 41,63,750. 10-mark question in your exam 4B. Question 5A. Depreciation. On 1st July 2022, Maritime Limited purchased second-hand machine for 1,20,000 and reconditioned the same by spending another 18,000. In 1st Jan 23, a new machine was purchased for 72,000. So by now we have two machines. On 30th June, the machine purchased on 1st Jan 23 was sold for 48,000. Another machine was installed at a cost of 90,000. There are three machines. One machine is sold. Rate of depreciation 15% original cost, straight line method. Show machinery account for 2022 to 2025. We'll start by preparing a working note. I've given the same question over here. I'll prepare on the side. Working note number 1. Calculation of depreciation. Particulars. We have three machines, M1, M2, M3. The first element I prefer to write is what? Date of acquisition. If I look at the question, M1 acquired on 1st July 2022, M2 1st January 2023, and M3 is on. M3 acquisition date is what? 30th June 2024. Is that right? Okay. 30th June 24. We'll start from the first year 2022-23. I start by recording cost. Cost of machine 1 is 1,38,000. 1,20,000 given plus 18,000 spent for reconditioning necessary for condition will be added, 1,38,000, and M2 72,000. In this year, there is no other purchase or sale. Directly we come down to depreciation at the end of the year. Depreciation for the first machine, how much? I will go ahead to say 1,38,000 into dash 1,38,000 into 15% into how many months? July to March, 9 months into 9 by 12. What is the depreciation? 15,525. For machine 2, 72,000 into 15% into 3 by 12. Only Jan, Feb, March, 3 months. Depreciation 2,700. Once you record this, you get WDV of the respective machines. WDV as on 31/3/23. M1 122,475. M2 69,300. During the second year, there is no any purchase. We have come down to 2023/24. There is no any other purchase. What will I do? Direct record depreciation. Less depreciation, they are following straight line method. So for the first machine, what will you record? 1,38,000 into 15%. Kitna? 20,700. For the second machine, 72,000 into 15%. 10,800. Once you record this, you again get the WDV. In 2024/25, we have WDV as on 31st March 2024. Kitna? 1,01,775 and 58,500 respectively. Now in this year, we have purchase of one more machine and sale of part of the machine or sale of second machine. So I go ahead to say add cost of third machine kitna? 90,000 less depreciation. M1 has not been sold. 1,38,000 into 15%. Depreciation kitna? 20,700. M2 has been sold. 72,000 into 15%. Into how many months? This has been sold when? On 30th June. So 3 months into 3 by 12. Your depreciation for M2 in this year is 2,700. M3 90,000 into 15% into 9 by 12 from 30th June onwards. Depreciation on third machine 10,125. After this, you get WDV of respective machines. M1 81,075, M2 55,800 and M3 79,875. If you get these calculations right, more or less preparation of machinery account becomes very simple. If these calculations are right, machinery account should automatically be correct. I'll prepare the machinery account. We'll start with the first year under consideration, which is the first year 2022-23. 22-23. On the debit side, I'll start by recording 1st July to bank. What is the cost of M1? 1,38,000. And in the same year, 1st January, again to bank 72,000. This is on 1st July. This is on 1st Jan. At the end of the year, 31st March, I go ahead to say by depreciation M1 plus M2 18,225. 31st March by balance carried down. I think the total of the account is 2,10,000. What's your balance carried down? 191,775. 18,225 was what? Your first year depreciation of both the machines. That is nothing but 15,225 plus 2,700. I come down to the next one. In the next year, 2023-24, how will I start? 1st April, I'll start by saying to balance brought down, opening balance 191775. During this year, we don't have any purchase, we don't have any sale. Directly at the end of the year, I go ahead to record depreciation. How much is your depreciation in the second year? Depreciation in the second year will be equal to total of both the machines, 31,500. 31st March by depreciation 31,500. 31st March by balance carried down. Total 191775. 191,775. Balance carried down 1,60,275. How did we get 31,500? It is the total of the second year depreciation, which I am marking in yellow color on the board. That is the total of 31,500. We come down to the third year. In the third year, there are few extra transactions to be taken care of. I'll start by recording 24-25, 1st April to balance brought down. 160,275 balance brought down. We have purchase of third machine. On which date? 30th June to bank account. Cost of M3 90,000. We have sale of machine 2 also. At the time of sale, 3 elements to be taken care of. First one, depreciation up to the date of sale, 30th June. By depreciation, only depreciation for second machine, 2,700. 30th June by bank account, selling price realized in your bank account, given in the question directly, 48,000. 48,000 is the selling price. What was the WDV of this machine? 55,800. So over here, you could also give another working note to profit or loss. I'll just compare it simply. Selling price is 48,000. WDV is 55,800. Do you get a profit or a loss? Your selling price is lower. Loss on sale of fixed asset. Kitna? 7,800. If I come to record that in my machinery account, the loss will be presented on the credit side. 30th June by loss on sale of fixed asset, 7,800. At the end of the year, 31st March, by depreciation, which assets? Remaining assets, M1 plus M3. M1 plus M3, 30,825. 31st March, by balance carried down. Check and tell me. Total is 2,50,275. Balance carried down 1,60,950. So, although this question was quite simple, but I don't think it was expected for 5 marks because it'll take some time to prepare. But once you get the calculations right, it's very simple to prepare it. This was question number 5A. 5B, if I look at it, there is a choice given. Attempt any one of the two subparts. For mutual accommodation of himself and Gagan, Aman drew upon Gagan a bill of 7,500 at 3 months on 1st April. Gagan accepted the bill and returned it to Aman, who discounted it immediately at 8% per annum. According to the agreement, Aman and Gagan shared the proceeds in the ratio 2:1. Accommodation bill, both the parties are sharing the amount, both the parties will share the discount. On the due date of maturity, Aman remitted his share to Gagan, who honored the bill by payment. No masala over here. On the maturity date, Gagan, Aman, whatever money they had taken, they are going and repaying to the bank. Show journal entries in the books of Aman and Gagan. So same question I've just copied over here. Let's try to do the journal entries. Same journal entries I will do in the books of Aman and in the books of Gagan. Who is the drawer? Aman drew upon Gagan. So in this situation, Aman is the drawer and Gagan is the drawee. First part is saying Aman drew upon Gagan. For Aman, it becomes bill receivable. Journal entry in the books of Aman bolo. Bill receivable account debit to Gagan. In the books of Gagan, Aman account debit to bill payable account. Aman draws the bill, Gagan accepts the bill. The next part of the question is saying Aman discounted it immediately with the banker at 8% per annum. Aman discounts the bill. At this point of time, what will Gagan record? At this point of time, there will be no entry in the books of Gagan. In the books of Aman, we will record cash received, discount allowed to bill receivable. What was the value of the bill? 7,500. He got it discounted at 8%. How much will be the discount? Discount will be 7,500 into 8%. What is the time of the bill? The bill has been drawn for 3 months. So into 3 by 12, that will give you a discount of 150. Discount allowed 150, value of the bill 7,500. Your cash received will be how much? 7,350. Do not forget 3 by 12 time period of the bill of exchange. After this, they are going to share the money. Who will transfer money to whom? Aman will transfer money to Gagan. What is the ratio of sharing? 2:1. What will be the journal entry over here? In the books of Aman, we will record Gagan to cash. But along with cash, what is he also transferring? Discount. To discount allowed. In the books of Gagan, receiving money, cash account debit to Aman. Along with cash, what is he also receiving? A share of the discount. What is your cash share? 7,350 into what is the ratio? 2:1. So 1 by 3 will be shared. And what is your discount share? 150 into 1/3. Cash share बोलो कितना? 7,350 into 1/3, 2,450. Discount share 150 into 1/3, 50. 2,500 transferred in the books of Gagan. Cash received is 2,450. His share of discount is 50. To Aman 2,500. After this, if we go ahead to check what happened on the due date, they are saying the bill is honored. Who paid money to whom? Aman paid money to Gagan. Gagan paid money to banker. Aman paid money to Gagan on the due date. What will be the entry? Aman paid money to Gagan on the due date. We will record Gagan account debit to cash. Aman paid money to Gagan. How much he will pay? The total value of the bill was 7,500. In that, what was the share of Aman? 2/3. 2,500 will be paid. Gagan will receive the money. He will record cash to Aman 2,500. No, it's not 2,500. It's 5,000. 2,500 was Gagan share. Aman share is 5,000. 5,000, 5,000. Cash received 5,000, 5,000. Now what should Gagan do? Gagan is supposed to pay money to the banker. When Gagan pays money to the banker, what will we record? Entry in the books of Aman. In the books of Aman, there will be no entry. In the books of Gagan, he is paying the bill payable. So we will record bill payable to cash. How much will he pay? Not just 5,000. 5,000 his share plus 2,500. 5,000 Aman share plus 2,500 his share. Total 7,500 will be paid. So these are your journal entries. Accommodation bill given, but no complication of second bill. Only one bill is drawn, and after which it was honored. I hope the entries are clear. Coming to the alternative choice question, the following are some of the transactions of digital stores for the year 24-25 as per their rough book. They are given certain transactions. In the end, if I see, they say make out the sales book of digital store. What does sales book record? Subsidiary books. Credit sale of goods only will come in your sales book. They're asking us to prepare sales book. So I'll go ahead to prepare format. We'll have simple format, particulars, amount. In the sales book, we have particulars, amount. Let us see which transactions are recorded. On the left side, you can see in the question. I'll just zoom in a bit if required. Sold to Alpha Industries 10 laptops. Can I record laptop? For a digital store, laptop is goods. 5 laserjet printers. Yes, sir. There's a trade discount of 15%. So let me go ahead to record. I'll start by saying Alpha Industries. We have 10 laptops and we have 5 laser jet printer. Tell the value. 10 laptops into 77,000. 7,70,000. 5 printers into 21,000. 1,05,000. Total value 8,75,000 is subject to trade discount 15%. Add or deduct? Deduct. Less trade discount at 15%. 8,75,000 into 15%, 131,250 You get your net value 743, 750. First transaction, very simple. Sold old furniture to Singh and Consultants on credit. Can I record? No, sir. Furniture is a fixed asset, will not be recorded. Sold 20 desktops to Brown and Company, 34,000 per desktop on credit. Can we record? Yes, sir. So below that, I will say Brown and Company, 20 desktops. 20 desktops. What is the value? 34,000 into 20, 6 lakh 80,000. I don't think there's any other adjustment. 6 lakh 80,000 directly outer column. Next transaction, sold 10 tablets to Goku Institute, 7,000 per tablet for cash. Can we record? No, cash transaction goes to cash book, not to sales book. Sold on credit to Jat Enterprises, 5 mobile phone. Yes. 10 external hard disk. Yes. So below this, we will record Jat Enterprises. What did they buy? 15 mobiles and 10 hard disk. So what is the value? 15 into 25,000, 3 lakh 75,000. 10 hard disk into 4,500, 45,000. Total value 4 lakh 20,000. This is subject to 10% trade discount. Less trade discount at 10%, 42,000. Net value 3 lakh 78,000. So if I total 743, 750, 6 lakh 80, 378, you get a total of 18 lakh 1,750. Many students make mistakes and come. Subsidiary books is a boon to get in the exam. A lot of blessings from teachers if you have got this. But many students make mistakes and come in the exam. They would have recorded cash transaction. They would have recorded furniture transaction. Do not make such a mistake in the exam. Simple answer. Let's come down to 5C. Following notes pertain to the balance sheet of PQR Limited. We have authorized capital 5 lakh shares, issued and subscribed capital 1 lakh 50,000 equity shares of 100 each, 70 paid up. They are partly paid up shares. 10,000 11% preference shares of 100 each, fully paid up. Reserves and surplus. Revaluation reserve, general reserve, CRR, securities premium collected in cash, and P&L account credit balance. On 30th April, the company has made the final call at 30 rupees each on 1,50,000 equity shares. The call money was received on 31st May. Final call money made and final call money received. If I just look at the last lines of the question, show necessary journal entries in the books of the company for bonus and right issue. Also prepare notes on share capital and reserves to the balance sheet of the company after the issue. So they're asking you journal entries and notes to accounts to balance sheet. Okay, so the first two journal entries will be related to this final call. I will record final call money due. Share final call debit to share capital. What will be the value? How many shares? 1.5 lakh shares into 30 rupees. That will give you 45 lakh rupees. And then the amount has been received. So we will record bank account debit to share final call. Of course, you will give narrations, call money due, call money received. Continuing the question ahead, it says, thereafter on 1st July 24, the company decided to issue bonus shares at the rate of 3 equity shares for every 5 equity shares held by the way of capitalizing its reserves. It decided that there should be minimum usage of P&L balance. So use all the other accounts, use P&L account in the last. What is the number of bonus shares that we can issue? After this, I will write down your number of bonus shares. 3 shares for every 5 shares held. 1,50,000 current number of shares into 3 by 5. That is equal to 90,000 shares. What is the value of these 90,000 shares? That will be equal to 90 lakh. 100 rupees each is the share. Now 100 rupees each is the share, 90 lakh is required. Can we use general reserve? Yes. CRR? Yes. SPA? Yes. PNL? Yes. Can we use revaluation reserve? No. So your only free reserves can be used. So I will go ahead to use these accounts. I'll prepare entry. We will use CRR first to the extent of 25 lakh. Then I will use SPA to the extent of 30 lakh, securities premium account. Then I will use general reserve existing to the extent of 25 lakh, and the balance will be from PNL. All these items to bonus to shareholder. I know my bonus to shareholder has to be 90 lakh. Why? Because 90,000 number of shares. So I have already taken from 90, 25, 30 and 25. Balance I will take how much from PNL? I've taken these. I will issue the shares now. How to issue the shares? Bonus to shareholder account debit to share capital account. 90, 90. Reading the question further ahead. On 1st October, the company issued right shares at a rate of 1 equity share for every 5 shares held at a premium of 10%. All the right shares were accepted by the existing shareholders and the money was duly received. So let us now go ahead to calculate number of right shares. So again, I draw a line over here. And then now we have number of right shares. How many shares were there in the company? 1,50,000. How many bonus shares issued? 90,000. Now existing 2,40,000 shares into what is the ratio of right shares? 1 for every 5 into 1 by 5. That is equal to how many shares? 2,40,000 divided by 5 is 48,000 shares. 48,000 right shares issued at a premium of 10%. Journal entry, what will I record? Bank account debit to share capital to securities premium account. How much money will I receive? I am going to receive 48,000 shares into 110. So I'll divide that by 1 lakh because I'm writing in lakhs. So that will be equal to 52.8. 52.8 lakhs basically. Out of that, your 48 lakh is share capital and 4.8 lakh is securities premium. Do not take both to share capital. Securities premium has to be credited separately. These are your journal entries. I just divided it on the board for first part final call due, final call money received, the second part bonus issue, and the third part dealing with right issue. Once you prepare this, you will prepare your notes to accounts. In your notes to accounts, make sure to record authorized capital, issued and subscribed capital, total number of shares now, and then your reserves and surplus. You've already used your CRR, you've used your general reserve. SPA balance will come back because of right issue, and then remaining PNL will be shown. Simple. Let's come down to question number 6. R Limited invited applications for issuing 1 lakh equity shares of rupees 10 each at a premium of 2 per share. The amounts were payable as follows. Application allotment 6 including premium, so that will be 4 plus 2, and the balance on the first and final call. The total money is 12, 6 is already received, 6 will be your final call money, first and final call money. Applications were received for 2,50,000 shares. You are going ahead for oversubscription. Applications for 1 lakh shares were rejected and a pro rata allotment was made for the remaining shares. The first and final call money was made. The amount was duly received except 3,000 shares applied by Jane. Her shares were forfeited. The forfeited shares were reissued as fully paid up 8 rupees per share, past necessary journal entries to record the above transactions. So we need to take care of oversubscription, refund the money to 1 lakh applicants, and then we have pro rata allotment, and then we have calls in arrears of Jane. Calls in arrears of Jane will be taken care on pro rata basis. Then the shares are forfeited and then reissued. Let us go ahead to make certain calculations. I'll write down. First of all, number of shares issued. Number of shares issued are 1 lakh. Number of applications. Number of applications are 1,50,000. Out of this 1,50,000, they have rejected 1 lakh applications. So your pro rata allotment would be 1 lakh shares to 1.5 lakh applicants. That would be the ratio. Okay, so let us go ahead to solve journal entries now. First, your application money received, regular journal entry. I will pass bank account debit to share application and allotment account. We have received how many applications? It was 2,50,000 applications. 2,50,000 applications into 6 rupees. That should be giving you about 15 lakhs. Now, out of this 15 lakh, how much will we transfer? So I'll say share application and allotment account debit. I'm going to first of all refund a few applications. How many refund? 1 lakh applications into 6 rupees. I will transfer some amount to capital. I will transfer some amount to securities premium account. How much goes to capital? 1 lakh shares into 4 rupees capital. 1 lakh shares into 2 rupees premium. So out of 15 lakh, 6 lakh is refunded. 4 lakh has gone towards capital. 2 lakh has gone towards securities premium. How much is remaining? 3 lakh is remaining. What is this 3 lakh going to be used for? It is the extra money received in the application stage, which can be transferred to your share call. You can also call it as share first and final call. After this, we are going to make the final call. So I will say share call account debit to share capital. We will make the call for how many shares? We will make it for 1 lakh shares into 6 rupees. 6 rupees, how did we get? The balance over here. Total issue price is 12, 6 rupees collected in the application stage, 6 rupees pending for allotment. Total money due is 6 lakh. Out of this, you can see Jane is not paying the money and some money has been received in advance. Let us try to check how much money Jane is not going to pay. Let us check how much is our calls in arrears. So for that, I will make working note number 2. Number of shares applied. Number of shares applied by Jane is, I think, 3,000. Yes, number of shares applied by Jane is 3,000. Out of that, how many shares will be allotted? We just now saw the ratio 3,000 into 1 by 1.5. That will be 2,000 shares. So 2,000 shares have been given to her when she applied for 3,000 shares. What is the total money received from Jane? 3,000 shares into 6 rupees, 18,000 rupees is received. But how much money is required? 2,000 shares into 6 rupees, 12,000 is required. How much is the excess money that she has given. She has given 6,000 rupees excess in the application stage itself. Now, let us calculate her arrears. Amount required from her, total, whatever I've written previously is in your application stage. Now, let us see in the call stage. In the call stage, total money required will be 2,000 shares into 6 rupees, 12,000. How much is adjusted from the previous state? 6,000. So therefore, what will be your arrears? Your arrears are going to be another 6,000. In your share call stage, we are receiving the money from everybody except Jane. Yes, so how much money will I receive now? 6,000 is not received. I will go ahead to say amount received, journal entry, bank account debit to share call. Instead of bank to share call, bank account debit, calls in arrears account debit to share call. We got to know our arrears is 6,000. How much is the money received in the bank? For this, we will need another working note. So I'll go ahead to calculate another working note. How much is the money adjusted from application stage? So if I see the total money received on application is how much? We got how many applications? We have got 2,50,000 applications into 6 rupees, but out of that 1 lakh has been rejected. So 1.5 lakh applications